this week. And the idea is that people are taking fake insurance documents and using them to obtain their license plates.
This is funding drugs, it's funding gun running, it's smuggling, and a lot of other criminal activity.
Car insurance premiums are climbing higher than ever. The average driver now pays over $200 a month.
You know that feeling when you walk into a casino? The lights are bright, the drinks are free, and everyone looks like they're having a good time. But deep down, in the back of your lizard brain, you know one undeniable truth. The house always wins. You might win a hand, you might even win a jackpot, but if you stay long enough, you will lose everything. Now, imagine a casino where you are forced to play by law. Imagine if the government said, to live in this country, to go to work, to buy groceries, you must sit at this blackjack table and bet 10% of your income every single month. And if you try to leave the table, you go to jail. That isn't a dystopian movie. That is the car insurance industry. We have been gaslit into believing that car insurance is a safety net, a service we buy to protect us. But today, I'm going to show you that it is actually the most sophisticated, mathematically rigged, and legalized scam in the history of modern finance. We are going to peel back the layers. We are going to look at why a safe driver pays more than a reckless one, why your premiums go up even when the accident wasn't your fault, and why, when you finally need them, they treat you like a criminal. Grab a coffee. Maybe grab your policy documents if you want to get angry. Because by the end of this, you are never going to look at that monthly bill the same way again. Let's start with the basics. The perfect business model doesn't exist, or does it? If you want to sell coffee, you have to make good coffee. If the coffee is bad, people stop buying it. That is capitalism. But the insurance industry doesn't operate under capitalism. It operates under a mandate. In the UK, the US, and almost every developed nation, car insurance is mandatory. You literally cannot put rubber on the road without it. Now, think about the economics of that for a second. When a customer has to buy your product, you stop treating them like a customer. You start treating them like a hostage. There is no incentive to be affordable. There is no incentive to be fair. Therefore, the prices we see today are not based on the cost of the service. They are based on elasticity of demand. That's a fancy economist term for how much can we squeeze them before they snap. See, normally, if a price gets too high, you just don't buy the product. iPhones are expensive, you buy an Android, or you keep your old phone. But with insurance, you can't walk away. You need to drive to work. You need to drive to drop the kids off. The insurance companies know this. They know they have you by the throat. So the first layer of the scam is simply the lack of choice. You are forced to participate in a system that is designed to extract profit from you, regardless of your behavior. But it gets weirder. Because you aren't just paying for your driving. Let's look at the logic. Logic suggests that if I am a safe person and I have a clean record, I should pay a tiny amount. But the insurance model doesn't insure the person, it insures the car. Think about how insane that is. Cars don't crash. Cars are inanimate objects. If I park my car in a garage and leave it there for a year, it will never, ever cause an accident. Therefore, the risk is entirely 100% on the human being behind the wheel. So why do we insure the metal box and not the human? If I have insurance, I should be able to hop into any car, my friend's car, a rental car, my mom's car, and drive it, covered by my policy. I am the risk. The policy should follow me, but that's not how it works. If I drive my friend's car, I'm uninsured, unless I have a special, expensive add-on. Why? Because if they insured the driver, they could only charge you once. By insuring the car, they can charge a family with 3 cars 3 separate premiums, even if there is only one driver. It is a multiplication of revenue that defies all logic. It forces households to duplicate policies for the same risk. It is the first sign that this system isn't built for your protection, it's built for their profit maximization. Okay, so you've bought the car. You've accepted you have to pay. Now comes the quote. How do they calculate your price? They tell us it's about risk. They say, we look at your driving history, but that is a lie. Or at least, it's only a tiny part of the truth. Modern insurance pricing is an algorithm that looks at thousands of data points that have nothing to do with your driving ability. They look at your credit score. They look at your job title. They look at your marital status. They look at the time of day you buy the policy. Did you know that if you buy car insurance late at night, say 1 a.m., you will often get a higher quote than if you buy it at 10 a.m.? Why? Because the algorithm decides that people who are awake at 1 a.m. are impulsive or irresponsible.
Therefore, you pay more. Not because you're a bad driver, but because you have insomnia.
They look at your email address. Some studies found that people with Hotmail accounts were charged more than people with Gmail accounts because the algorithm decided Hotmail users were less tech-savvy and therefore riskier? It's absurd. And let's talk about the job title scam. If you list your job as chef, you might pay £500. If you change that title to catering staff, the price might drop to £400. Same job, same commute, same car, different word. Why? Because the algorithm has decided that chefs are stressed and work late nights, while catering staff sounds safer. It is a guessing game played with your wallet. But the most sinister part of the algorithm is what they call optimization. This is where the scam turns evil. Let's say the computer calculates that your risk price is $1,000. That is the amount they need to cover the chance of you crashing. You would think they would quote you $1,000, right? Plus a little margin for profit? No. The algorithm then runs a second calculation. It asks, how likely is this person to switch to a competitor? If you are the type of person who shops around every year, they might quote you $1,000. But if you are a loyal customer, if you have been with them for 5 years, if you have auto-renew on, the algorithm says, this guy isn't going anywhere. Therefore, they quote you $1,500 or $2,000. They charge you more because you are loyal. In the UK, this was such a massive scandal that the government had to step in with a super complaint, costing consumers billions. But in many parts of the world, this is still standard practice. They punish loyalty. This piece of paper, the renewal notice, it is the most expensive piece of junk mail you will ever receive. Every year, millions of people just let it auto-renew because they are busy. And every year, the insurance companies high-five each other. They bank on your apathy. They know that if they raise the price by just 15%, you'll grunt, but you won't cancel. It's the lazy tax, and it generates billions in pure, risk-free profit. Now we get to the core of the deception, the no-claims bonus. On the surface, this sounds great. Hey, you're a good driver. Here's a discount. But let's look at what a no-claims bonus actually is. Insurance is supposed to be a pool of risk. We all put money in so that if one of us has a disaster, the pool pays out. That is the social contract. However, the no-claims bonus twists this. It turns insurance into a bet against yourself. Let's say you have a minor accident. You scratch your bumper on a bollard. The repair cost is $800. You pay $1,000 a year for insurance. You have paid them for 5 years. You have given them $5,000. Ideally, you say, okay, I've paid you $5,000. I need $800 back to fix my car. But you don't do that. You call your mechanic. You pay cash. Why? Because you are terrified. You know that if you make that claim, you will lose your no-claims bonus. Your premium next year will jump from $1,000 to $1,500, and it will stay high for 5 years. Let's do the math. A $500 increase for 5 years is $2,500. So, to get $800 from the insurance company, you have to pay them an extra $2,500 over the next few years. Therefore, you don't claim. Think about how brilliant that scam is. They sell you a product that you are financially terrified to use. You pay the premium every month for peace of mind, but when the bad thing happens, you pay for the repair out of your own pocket anyway. Imagine buying a Netflix subscription, but every time you watched a movie, your monthly fee went up by $10. You would stop watching movies. You would just pay the fee and stare at the menu. That is car insurance. A subscription to a service you cannot afford to use. But wait, I hear you say. What if it's not my fault? What if someone smashes into me? Unfortunately, that logic doesn't apply here. This is where the legalized scam goes from annoying to infuriating. Let's say you are parked. You are sleeping in your bed. Your car is legally parked on the street. A drunk driver smashes into your car and totals it. You are 0% at fault. You were asleep. You call your insurance. They sort it out. The other guy's insurance pays. Great. Then your renewal comes, and the price has gone up by 20%. You call them. You scream, "It wasn't my fault!" And the agent, in their calm, robotic voice, will say, "We know, sir, but statistics show that drivers involved in a non-fault accident are statistically more likely to be involved in another accident in the next 3 years." This is real. This is how they operate. They don't care about justice. They care about data. And their data says that if you are the kind of person who gets hit, maybe you live on a busy street, maybe you drive at unlucky times, you are now high risk. Therefore, you pay for the crime of being a victim. I want you to really let that sink in. Someone destroys your property, and you pay a fine to the insurance company for the privilege of having been hit. And God forbid you get into a 50-50 claim. That's the insurance company's favorite outcome. In the old days, maybe they would fight for you, but fighting costs money. Lawyers cost money. Investigations cost money. So the two insurance companies, yours and the other guy's, have a secret handshake. They say, look, let's not fight. Let's just call it 50-50. We both pay our own clients' repairs. Why do they do this? Because if it's 50-50, both drivers are at fault. Both drivers lose their no claims bonus. Both drivers see their premiums skyrocket. By refusing to investigate the truth, the insurance industry as a whole makes more money. They double their profit by agreeing that everyone is guilty. And while we are talking about repairs, let's look at the approved repairer scam. When you do claim, your insurer will say, you must go to our approved repairer. They make it sound like a VIP club. Oh, these are the best guys, quality guaranteed. But actually, it's a cost-cutting racket. These approved repairers have contracts with the insurance giants. To keep those contracts, they have to agree to fix cars for rock-bottom prices. So you bring in your beautiful BMW or your Ford. The insurer pays the shop peanuts. The shop has to make a profit, so what do? They rush the job. They use aftermarket parts instead of original parts. They use filler instead of replacing panels. You get your car back. It looks shiny, but underneath, it's a Frankenstein monster of cheap parts and cut corners. And if you say, no, I want to take it to my guy, I trust my mechanic, the insurer says, okay, but we won't give you a courtesy car, and we'll double your excess fee. They bully you into accepting substandard repairs because it saves them money. They control the entire supply chain. They own the data, they own the repairers, and they own your wallet. Now let's talk about the worst case scenario, the total loss, the write-off. Your car is smashed. It's gone. You need a payout to buy a new one. You bought the car for $20,000 last year. You check Auto Trader, and similar cars are selling for $18,000. You expect a check for $18,000. The check arrives. It's for $14,000. You call them. This is a mistake. I can't buy a car for $14,000. They say, I'm sorry, sir, that is the market value. Here's the trick. They don't use the retail price, what you pay to buy a car. They use the trade price, what a dealer pays to buy a car at auction, or an average of the lowest, dodgiest listings they can find. They know that 90% of people will just accept the check because they need a car to get to work tomorrow. They prey on your desperation. There are entire forums and consumer groups dedicated to fighting this. If you reject their first offer and send them 3 examples of real cars for sale, they will often magically increase their offer by $2,000 or $3,000 instantly. Think about what that means. It means they knew the car was worth more. They had the money ready, but they tried to steal it from you first. They tried to see if you were desperate enough to take the lowball. It is a negotiation where they hold all the cards and they bluff every single time. If you think it's bad now, wait until you see the future. The future is telematics, the black box. They sell this to young drivers as a way to save money. Install this app, put this box in your car, prove you're a good driver and pay less. It sounds fair. Therefore, millions of young people do it. But this is the ultimate Trojan horse. These boxes don't just track if you crash, they track everything. Did you brake a little too hard because a dog ran into the road? Ping! Harsh braking event. Your score goes down. Did you drive at 10 p.m. because you work a late shift? Ping! High-risk driving time. Your score goes down. Did you take a corner slightly fast? Ping! They are gamifying your driving, but the game is rigged. There are horror stories of policies being canceled because a driver had to emergency brake to avoid a child. The box didn't see the child. The box only saw the G-force. It decided the driver was reckless and canceled the policy. Once your policy is canceled, you are on a, quote, blacklist. You have to declare that cancellation to every future insurer. Your premiums for the rest of your life will be double or triple. Because you braked for a child, this is the surveillance state entering your vehicle. They are building a profile of you that is so detailed, they can predict your risk better than you can. And do you think they will use that data to lower prices? History tells us no. They will use that data to maximize extraction. They will find the, quote, perfect price, the exact maximum amount you can afford to pay without going bankrupt, and they will charge you that. So let's zoom out. Why is this allowed? Why is this legal? Because the insurance industry is essentially a giant investment bank. Here is the dirty little secret of how they make money. They don't just make money from the difference between your premiums and your claims. In fact, many insurers claim they make zero profit on underwriting. They make money on the float. You pay your premium in January. You might not crash until December or ever. For those 12 months, they hold your money. They don't put it in a piggy bank, they invest it. They pump it into the stock market, real estate, government bonds. They make billions in interest on your money. They are essentially a hedge fund that forces you to give them capital. Therefore, they have immense political power. They lobby governments to keep insurance mandatory. They lobby to keep payout caps low. They lobby to prevent driver-based insurance because it would shrink their capital pool. The system is self-perpetuating. The government mandates the product. The companies rig the pricing. The courts enforce the rules. And you, the driver, foot the bill. And because the prices are so artificially high, we see the rise of the ghost broker. This is a side effect of the scam. Kids who simply cannot afford £4,000 for insurance go to Instagram. They find a guy who promises insurance for £500. It looks legit, they get a certificate, but it's a fake. The broker takes the money, sets up a policy with fake details to get the paper, and then cancels it immediately. The kid is driving around uninsured, liable for millions if they crash, and they don't even know it. The industry screams about these fraudsters, but they never admit that their own predatory pricing is what created the market for ghost brokers in the first place. When you price people out of the legal market, you force them into the black market. So, what can we do? Is this just a video to make you depressed? No. Knowledge is leverage. Now that you know the game is rigged, you can play it better. First, never auto-renew. This is rule number 1. Loyalty is for dogs, not for insurance companies. Set a reminder in your phone 21 days before your renewal. That is the sweet spot. If you look for quotes 3 weeks early, the algorithm thinks you are organized and low risk. If you look the day before, it thinks you are panicked and charges you more. Second, protect your NCD. Pay the extra few dollars to protect your no claims discount. It sounds like another fee, but in this rigged system, it's the only shield you have against the non-fault trap. Third, fight the valuation. If they write off your car, never accept the first offer. Find 3 ads for the same car, same mileage, same condition. Send them the PDFs. Demand the real replacement value. They will fold because they know they are lying. Fourth, check your job title. Don't lie, but check if there is a legitimate alternative title for your job that is cheaper. Are you a journalist, high risk, or a copywriter, lower risk? If you do both, use the cheaper one. But the real takeaway here is a shift in mindset. Stop thinking of insurance as protection. It isn't. It is a tax. It is a legal requirement to be on the road. When you understand that they are not your friend, that they are not there to help you when you crash, but to minimize their loss and maximize your premium, you stop being a victim. You stop trusting their approved repairers. You stop believing their market valuations. You start fighting back. The casino might always win in the long run, but that doesn't mean you have to make it easy for them to take your chips. Drive safe, check your renewal dates, and don't let them grind you down.